importance does this hearing have, and indeed the legacy of Janet Yellen?
Fantastic to see you again, Rishaad. Look, it's important for markets with regards to what the expectations are for 2018, but we all know that Powell is bringing business as usual. What should be concerning investors with regards to the fact his comments on inflation and what we're expecting for real growth. He's very publicly said that he thinks the US economy has full employment, and if these people actually visit half of the industrial belt of America, I don't think most people would agree. And that's something I think...
That's the participation rate you're alluding to?
Yes, absolutely. And I guess what's really should be concerning markets at this stage is the real economy is not represented by financial markets.
And with the participation rate being as high as it... well, as low as it is, I should say, the people who are not participating being quite high, is that why we aren't seeing that much wage inflation pressure?
Absolutely. I guess the point I'm making with the real economy with regards to the US markets is that we are now in the longest US expansion in human history. And when markets move like they have over the last 6 to 12 months, people don't really care about the underlying real economy. But when a retracement happens, that's the first thing that people look at.
Absolutely. We talk about the retracement coming up, but if we look at valuations, they aren't stretched that much. They're a bit rich, but nowhere historically as high as they have been.
No, but we are in an unnatural part of the cycle, and we are at the late stage. It's the longest US expansion in human history. The relationship between fixed income markets and equities is a bit distorted at this part.
Well, that's no doubt a product of QE, TARP, and obviously Operation Twist.
Yes, absolutely, 100% that. And people forget that we're still in emergency repair mode from the monetary policy point of view.
Markets never plateau and then collapse. Every retracement, aka crash, since 1881 in the US has been triggered by a fixed income rally, spike, and then collapse, which triggered equities, and then the real underlying economies. Those are your words. Explain.
So what's unnatural about what's happening at the moment is the real economy is detached from financial markets. What markets should do is they should silhouette the real underlying economy.
But that hasn't happened for years.
No, it hasn't. But what's good about understanding what that quote is there's some fundamental economics that hasn't changed in 150 years. And I guess the real great analogy with what's happened in America is that the same relationship should apply to China at this stage in the cycle. People are concerned about what happened in bond markets in China recently, and that relationship appears to be identical in mainland Chinese bourses and fixed income markets as what Americans have seen in their markets.
Sterling, are you saying that we're about due for a crash, in other words?
Naturally, we should be at this stage, but we're not living in normal times. And again, that's the point I made earlier, is what's important...
But is it an economic slowdown or is it a market slowdown, as it were?
Absolutely. To answer your question directly, it should be a market retracement that's coming, but then people will put their focus back on what's happening in the underlying real economy, and that's something I think people aren't focusing on at the moment.
With a Seek profile,